Hello everyone, welcome to Royal Online Tutorials, the online education channel. Today in our video we are going to discuss how to develop a risk identification strategy. But before we start, don't forget to subscribe my channel. It's very useful to develop a risk identification strategy. So here we should identify what are the different types of risks that we may face while implementing our project. So we should know how to manage the following risks in order to reduce the level of failure. So let's start with the financial risk. Here it's referring to the financial exposure a firm opens itself to when developing a project. For example, here we can say if there is a large upfront capital investment required, then the company is assuming a serious financial risk in the project. Moving to the technical risk. When new projects contain unique technical elements or unproven technology. So here in this case they are being developed under significant technical risk. Here we can face and see like degrees of such risk. In some cases, the technical risk is minimal. In the example of when we have like modifications to an already developed product. Otherwise, in other situations, then the technical risk may be substantial. The commercial risks here it's for the projects that have been developed for definite commercial intent. Here we are talking about profitability. So here a constant unknown is the degree of commercial success once they have introduced in the marketplace. So we know that the commercial risk is the uncertainty that companies may willingly accept, given that it's virtually impossible to accurately predict the customer acceptance of a new product or service venture. The contractual or legal risk. So this form of risk is often consistent with the projects in which strict terms and conditions are drawn up in advance. In addition to the risks, and before moving into the final one, which is the execution, we know that we may have in addition a lot of type of risks that we may face in projects, like such as absenteeism, resignation, or staff pulled away from by the management. Maybe staff that are not available anymore in the job, maybe unavailable skills and knowledge, maybe the training is not effective as desired, the initial specifications are poorly done, or they are incompletely specified, the work or change orders multiply due to various problems, maybe the enhancement are taking longer than expected, etc. Finally, the execution risks. Here we can ask an important question, which is what are the specific unknowns related to the execution of the project plan? Here it's very important to question whether or not there are geographical or physical conditions that could play here a crucial role. The execution risk is a broad category that a project team personnel might constrain project execution. So here, specifically when we talk about like poorly training or insufficient, as we said, project team personnel, here they may constrain the project execution. So that's why the execution risk is a broad category that seeks to assess Any unique circumstances or uncertainty, like what I've said before, such as the poorly trained and insufficient project team personnel, that may have a negative effect on the execution of the plan. Thank you for watching my channel.